So today we're here to talk about some of the mortgage rates and some of the changes in the mortgage applications and whatnot. So, Elise, I'm going to start with you. So, how can the new mortgage rates affect my ability to renovate or build a new home?
What happens, the rules changed on January 1st with
Mhm.
federally regulated institutions.
Yeah.
So now what happens is even though you might be paying a lower interest rate in your mortgage, you're being qualified at a higher rate. So it's the greater of the Bank of Canada, the benchmark Bank of Canada, which is right now at 5.14, or the interest rate plus 2%. So if rates, for example, are at 5.69, you would be qualifying at 5.69. So what's happened, it has reduced the ability for borrowers to, they'll be qualifying for a less amount of money. So it's roughly about 20% less.
Wow, that's a significant amount, isn't it, when you're looking at a home, especially in Vancouver where the homes are so expensive and going up, it seems, daily.
Yeah, so these are rules for people that are buying properties over $1 million because they are required to put at least 20% down.
Right.
And also for people that are looking at refinancing.
Gotcha. Okay. So, Sandro, how does that affect your business? Do you have a lot of clients that are getting caught up in these new interest rates, new rules?
I haven't really found anybody at this point that's been caught up in the new interest or the new rules. So no, it hasn't really affected me a whole lot.
Oh, okay. So that's good news for you.
Yes.
So, Elisa, from what I understand, there's different tiers in the interest rates now. So, what are they?
Normally, the interest rates that you see, the ones that are listed as the lowest rates, those are usually for people that are purchasing property and they're putting less than 20% down. So those mortgages are going to be insured. So they're insured through CMHC, Genworth, or Canada Guarantee. So those are the lowest rates you normally see.
Oh,
The
okay.
next tier up is when you're qualifying at the benchmark or the 2% at 25-year amortization.
Okay.
So those are the next tier up you see. The next one would be if you're qualifying at 30-year amortization and either you're refinancing or you're purchasing a property.
Okay, thank you. So, for someone who has a lot of equity in their home, do you still have to qualify for a mortgage?
Yes, that's an interesting question because it's definitely a misconception. People think because they have tons of equity in their house, they're like, oh, I'll just take the equity out. However, you do have to debt service that mortgage. So it doesn't mean that just because you might have 50% equity in your home, you do still have to qualify. One
Okay.
thing that we do is there's different lenders. So there's the banks, which are your typical A lenders, and as well as credit unions and other mono lenders that only work with brokers. As well as there's the B side where they allow the ratios to be a little bit higher.
Right.
And then there's the private side. So again, there is different options. It's just figuring out what is the right strategy for the client.